So I just want to go over one page for you here, and then we're going to spend the majority of our time today in the live markets. Lots of trading opportunities. I've actually already taken 2 trades today. I'm in one, just got out of the other. So we'll go over those and plenty more that we have for you. So great to see everybody. Again, what we're going to go over here is, so obviously the strategy that I talk about at FX Street is really, quantifying real supply and real demand in the markets, identifying where banks are buying and selling in the markets so that we can buy and sell there too. My background is I started on the institution side of the business, facilitating institutional order flow. And my goal way back was to simply figure out, all the big buy and sell orders in the FX markets and really in any market. It's easy to see those when you have them in front of you, when you're on a trading floor like I was. But when you get to the screens, well, what does that simple picture look like on a price chart of an extreme supply and demand imbalance, right? Because that's where prices always turn. So that's what we go over here in these sessions. That's what we're going to go over here today. What I want to dive into today, though, is really not refining that, but just taking a deeper focus, an easier, simpler focus on the 2 main components of strategy, right? So again, our goal is to identify where market prices are going to turn and where they're going to go, right? Would everybody agree with that? And when it comes down to it, if you had to come up with the 1 or 2 most important things when it comes to short-term trading for income or long-term trading for wealth, we'd probably all agree it's being able to identify where market prices are going to turn and then where they're going to move to, right? Is there really anything else you need to know? And if you could really become an expert in those 2 things, I think hopefully you'd be on a good path. So that's the focus we're going to have today. And when you learn core strategy at Online Trading Academy, some of you are in the XLT, so you learn the odds enhancers. Some of you are not. But when it comes down to really all of that, right, core strategy and odds enhancers and everything, comes down to 2 most important things, right? Fresh levels and significant profit zones. So I'm going to type that in the chat. So we have that. Fresh supply and demand levels is 1, because that's where prices always turn. And 2 would be significant profit zones, because that's where price, that's how we know where price is going to move to. Okay, we want to find areas on the chart, price levels on the chart, where there's a significant amount of demand or supply. That's your turning points. And then we equally want to find, it's just as important to find areas on the chart where you don't have significant demand or supply, because the price levels where there's a lack of unfilled orders is where price is going to move through rather easily and quickly. If we can figure those 2 things out, we're good to go. So let's start to do that. If you take a look, here's a trade that I took just a little ways back, and this was in the NASDAQ. Now you can't see the supply level here. It's actually on a smaller time frame inside that yellow box, but just trust me, they were fresh, good fresh level in there. I think there were 2 levels on top of each other. There were. Anyway, nice fresh levels in there. But look at how price moved up to that area. If you see there's a gap and then price moves higher with this green candle. When you look at the gap and the green candle and put them together, there's nothing in that picture that represents any demand. So we're expecting prices to turn in the yellow box area, which they did, and then we're expecting price to fall rather easily through this pocket of nothing. Okay, and then down around here is where the target was. This was just a short-term income trade, nothing, no big trade or anything. Okay, yeah, Ray, having a significant profit zone or a very clear profit zone is it's just as important as identifying obviously supply and demand zones. So I just want to be very clear on this one, right? The key here was no demand until you got down to this 94, say 25 area. There was nothing in here to stop prices from falling. Sure. Right. No. There's a little trading activity focus, but not enough. There, I just made it bigger. Hopefully that's helpful, Danny. Okay. And just remember, all the trades I'm showing you here, these are all real trades with real money, real accounts. These are not hypothetical returns or demo accounts. You don't have to worry about that. Okay. So again, price came into an area where supply exceeded demand, and then we thought it was going to fall because there was nothing to stop it from falling. Okay. All right. Let's move on to the live markets, and been a lot of trading already to opportunities today. Let me see. I just have to make sure you can see the screen. Oops. Hold on a second. I will get this right. Sharing. Oh, here. There we go. Are you? You should be looking at TradeStation, right? Andy, the origin of the gap is where we expect demand, but not the gap or the green candle itself. Does that make sense? The gap in the green candle itself means there's very little trading there. In fact, the gap means there's no trading. So there's no floor there, nothing to stop price from falling. And the green candle is not, that's not demand either. Does that make sense? The origin of the gap, yes, but that would be where the target is. All right, very good. Jack, no, I see your message there. No indicators, no oscillators ever. And the reason is because those are going to only adding a lagging tool to our decision-making process, such as an indicator, an oscillator, what have you, is only going to increase risk and decrease our reward, right? Profit margin, profit zone. So we don't want to do that. Okay. All right, let's keep going. So here's a trade I'm actually in at the moment. Okay. Getting close to taking some profits on this. Didn't use the whole stop on the 60, but here we had the combination of a larger time frame, very quality supply zone. Okay, right up here. It's a 60-minute chart. Base drop, rallied back up. So we had the combination of a larger time frame supply zone. And if you look at the small time frames, we're expecting price just to come down to about 15. It could certainly go lower, but we are going to have a little bit of demand down here. There's looks like there's still some more between 10 and 14. We've got some fresh demand down there. So again, just a couple short-term income trades today. It is low on the curve, Nick. That's another. Well, I wouldn't say it's that low on the curve, but there's definitely some room for it to fall. Which, it hasn't fallen 10 ticks yet, but well, I guess it has. It's fallen about 10 ticks. It's getting there. It's got a little bit more to go. It can certainly rally back up to this area. The stops right around. I think it's a break even now, but so we'll see. When you look at the curve, yeah, let's take a look. So here's our euro level from a couple sessions ago, right? I don't know if anybody took this at the 137. Anybody get in that? We talk about these big picture opportunities. You don't get that many just this clear and easy in something like the euro. The life song, you got that? Good. Yeah, that was a good one. But if you look below, where's the next fresh area of demand on the daily chart? It really isn't until much, much lower. There are some little pockets on smaller time frames, but not in the larger time frame. Yeah, so let's James, good. We got that too. Excellent. All right. So yeah, not too. And the other thing is, not only is there a lack of larger time frame demand in the euro here, but look what's now sitting just above us, just above 136. Now we've got some supply up there, right? Yeah, we can walk through another one of these kind of slowly. Again, if you hadn't had all the odds enhancers, it'll be tough to put all the pieces together, but we can we can do our best. And let's go over the S&P. So this is a trade I'm in and out of already today. Some of you may have taken this one. Yeah, Mike, I wouldn't say there's a best time frame. We want to use two sets of time frames, and those two sets are what we use for. One is for short-term income trading. The other one is for long-term wealth trading. So the S&P is a trade, another trade I took this morning. And it looks like some other people are in this too. I saw the first time back, not everybody in our program got filled, but it looks like they did now. So here was the supply zone. We know that because prices fell out of that area. Remember that you always need two things equally. Okay. Like I started with, you need a fresh supply and demand zone, right, where banks are buying and selling. And then you want to find those levels that are far apart from each other. So in other words, you want to find a lack of supply and demand in between your levels. Make sense? So price fell from this area, but watch this. So price falls from this area here. But notice I want to show you something because it's very important. Did not get a full position on this one, so didn't get all the profit that I wanted to on this one. Hang on just a second. Okay, so I want to show you price falls out of this area and does two things for us. Okay. No, Boyke, well, I think once you get all the odds enhancers, it's a pretty objective, simple set of rules. So price falls out of this area, and I'll explain some of that now. So price falls out of this level and gives us two key pieces of information. Remember, this webinar is focused on two things, right? Fresh levels and significant profit zones. So price falls out of this level, telling us two things. Number one, it tells us supply exceeds demand here. There's more available supply than there is demand. We know that for sure because prices drop, right? On the drop, in other words, if supply and demand were equal here, there should be sound. I see Susan doesn't have sound, but there should be sound. If supply and demand were in equilibrium here, were equal, prices would keep trading sideways, right? If there were an equal number of willing demand and supply, buyers, sellers, but there wasn't, right? So right here is where the last buy order was filled. We still had a significant amount of supply left over. Every time that equation is true, price is going to drop, right? It then falls into an area of fresh demand, okay, where we obviously get a rally back up to supply. But look at how deep price goes down into the demand zone. What does that tell us about the demand or unfilled buy orders sitting in this level? What information does that give us? See what I'm saying? Yeah, it gives us a lot of information. So it's getting weaker. Some of the buy orders are filled, exactly. Meaning that now, so remember, while that's happened, we haven't taken our trade yet. The trade happens on the first pullback here. Okay? The trade happens right here. Or if you missed that entry, I guess you could have got in right here, right? So now we're in. But when we sell here, okay, who are we selling to? You have to make sure you know who you're selling to. You have to make sure you know who's on the other side of your trade. Make sure that trader is making some key mistakes. Here, the buyer who you're selling to is buying after a rally in price, right? They're buying after like a three-point rally in price, not a smart thing to do. And they're buying right into a price level where the chart already told us supply exceeds demand. Retail on the buy side, banks on the sell side, that's when we want to put our hard-earned money at risk in the market. But where do we expect prices to move to? Well, if a lot of these orders in this demand zone are now filled, where's the next stopping point for price? Now, this is kind of a ugly area down here, but anyway, here's the next likely turning point, right? In other words, the way it's simple to say it, where's the next set of buy orders? Make sense? So, and I see some of you, it sounds like are kind of new to this, so definitely go back and watch some of the webinars. But also, too, this is just motion into math. This is where Isaac Newton explaining his 3 principles of motion, we have the same conversation, right? Instead of, we're just talking about price and orders, right? Yeah, so Andy writes, we know supply exceeded demand here because price fell from that level. So the next time price gets here, we know someone is buying after price has rallied. That's a novice move. No successful buyer and seller of anything would ever do that consistently and be profitable. It's just not possible, right? The second thing we know is they're buying into a price level where supply exceeds demand. The chart already told us that. There's just buying and selling going on. So you see in the supply level here, another thing I want to correct, because I hear some people get this wrong a lot. People, before prices drop away, or even when they do, when people go back and explain this, they say, so here, in this, price there was equilibrium here, and then price fell. No, there was never equilibrium. Even though price is moving sideways, it's not equal. Behind the scenes, it's a very unbalanced equation that takes a certain period of time to play out. It's like an earthquake, right? Okay. Again, the equation behind this and the equation behind how an earthquake happens, it's all the same thing, motion into mass. Okay. What creates movement? What creates motion, whatever you want to call it? Okay. Like an earthquake, right? There's 2 plates of land butting up against each other. One's force or strength is stronger than the other. You don't get the earthquake. You get the earthquake once you reach this threshold. Right? And for us, the threshold is the last buy order is filled here, and you still have sell orders left over. But you only know that after price drops away. So that's why we let that happen. Exactly, Paul. Exactly. Okay. But even exactly like your musical chairs example, it's always out of balance. The game starts out of balance, right? You don't have a winner until the end. Same thing, Nick. Yeah. So your example is just a larger time frame. Anyway, so we'll let this play out. I'm out of this trade already. Just want to make sure full disclosure, so you know what I'm doing. And if I'm ever in a trade that I'm talking to you about, I'm always going to tell you I'm in that trade. Or so just want to make sure I let you know. All right, let's take a look at another market. I don't want to spend too much time on these two. If you have another market you want to look at, we can certainly do that. I know gold had let me go to gold while you're typing in some markets there. Want to look at the pound yen? No problem. All right, let's take a look at gold because I know there's a level here as well. This is a short-term income opportunity, but let's assess this one now before it hits. So if we look at, let me try to clean this up. Oh, not enough data. Okay. So let me blow this up. Hopefully this is helpful. I'm trying to explain this at a pretty simple level here. And for those of you that had listened to the webinars and been coming to the sessions, I know some of this is reviewed for you. So we're going to go with this. Now, I just want to make sure you understand, we're now looking at a market that is not as liquid as the 2 we just looked at, okay? You can't even compare liquidity. So be careful. If everybody in our webinar shorts this market right here at the same time, be careful. You might trade the other side of the trade. Anyway, and don't jump in and start trading this market if you don't know about it and you're not used to it. This is a big, big money market. It's a COMEX gold futures. So having said that, FX, it's not just the amount of time and holding time. That's it. So again, here we have a level where prices were trading at, and then fell away in strong fashion. What does that tell us about the supply-demand equation at this level? Small imbalance or big imbalance? All right. Next, yeah, so likely to be a big imbalance. And again, we're dealing with a thinner market, but that's okay. So we've got a supply level here. Now, so we've got an idea of where prices are likely to turn if they keep rallying up here. But the next thing is, where are they likely to move to? Well, the fact that prices move in gold from 1316 down to 1311, what does that tell us about the demand from 1316 to 1311? In that range, what does that tell us about the demand, the buy orders? Right, there cannot be any significant demand in there. It's not possible. If there was, price never would have fallen to 1311. Does everybody understand that? Like when price is trading 1311, you can't have someone trying to buy 1314 and not get filled. They're filled. You just got a better price. Okay? So we want to look for the next demand zone, the demand level below current price. Let me go down to a smaller time frame and see if we have one. I have a feeling we're going to, and we do. Okay, so the next fresh demand zone below current price is going to be right here. In other words, the next pocket of significant buy orders is likely to be right here. You know, now that I look at this, the level I like much more is this one right here. I think this is actually the level I was looking at yesterday, or this morning. Sorry, not yesterday. Everybody see that one? You know, you're probably going to turn before that, but that's certainly a good level up there. Remember, that's another odds enhancer. Less time at the price level, the more out of balance supply and demand is at the level. Okay? So we've got some supply up here. Banks are big willing sellers of gold up here, and buyers of gold down around 1310. So we've got two fresh supply zones, one fresh demand zone, and if there's enough room in between, we take the trade, right? Just make sure you're good with the risk reward. Now, let's say in your trading plan, you're looking for opportunities where you want to get paid 5 to 1. You're looking for opportunities in all these markets or whatever markets you're trading where you want to at least be offered 5 to 1. You want to have the opportunity for a 5 to 1 payout, right? All right. So what you do is make sure that the opportunities that you decide to take are offering you at least 7 to 1. Okay. Or 6 to 1 is okay, but just make sure that the opportunities you find and are acceptable to you are offering you more than what you're looking for. So Paul, if you want 5 to 1, then make sure the chart's offering you 6 or 7 to 1. And then take your profit at 5 to 1. Okay, make sure you understand that. So again, make sure that if you're looking for 5 to 1, make sure the chart's offering 6 or 7 to 1, and then still take your profit at 5 to 1. Now you're going to increase your winning percentage. All right, let's move on. Let's look at the pound yen. Okay, let's take a look. So larger time frame, not showing us too much here. Let's go over to the daily. So obviously we've come into all this over here, right? There's really the origin of that. It's really right there. You know, I forgot that this market was here. Focus, no, really never. So in the larger time frame, obviously price has rallied up to this supply. Now notice it's been there quite a while, and it's probably touched it 1, 2, 3, 4, maybe 4 or 5 times. So while if you look at it that way, looks like we're eating up all the supply up here. Yeah, some of those sell orders are definitely filled that weren't filled before, but the fact that we're just touching that area and falling away tells us that there's still plenty. This thing can still very easily fall. Okay. If the equation was becoming more imbalanced or flipping to the demand side, price would be going much deeper into the supply zone. But there's obviously still quite a bit of supply up there. So that tells me we can still look for shorting opportunities. Let's go down to a smaller time frame to do that. And I don't know what we're going to find, but let's look. Okay, so if we kind of blow up the 60-minute here, price is already down so much. We're not going to find anything close to current price. Our shorting opportunity is going to be a little bit higher. So these are the levels up here that we would look at. That one and this one, all coming out of a nice rally-based drop. That's what we're looking for. So we've got 2 levels up here. Again, this is not close to current price, so I'm not going to spend too much time here. So prices got up just above the 173.80. Well, I'll tell you what that is. 173.93. And then on the demand side, you're going to have a level down in here. This is your next fresh level. That's a great level, but you already have a pullback, right? Remember, there's a great level. This is the level I've been showing you, but there's your entry for it. There's a great level. You've already had a pullback. There's your entry. Just like, I'm trying to find the ones below. Hang on. On the demand side, no, we're not in a demand zone now. We're in these pivot lows. Those are not fresh levels. So there's a great demand zone, but you already have a pullback. The next one below that, that's fresh. Remember, we want to keep it fresh levels and significant profit zones. Okay. Not after one retest, no, Andy. No, not after one retest at all. It all depends on how deep prices are going into the level. You could have 3, 4, 5 retests to the level. If they're just touching the level and turning, still a good level. Okay. So remember, rally-based drop on the supply side, drop-based rally on the demand side, and we're finding those little levels inside of that are helping out too. We can take a look at another market, if you like. All right. This one, Euro's just kind of sitting there, not doing anything. Let's see what the S&P's got going. All right, so back, this is one we were kind of watching and tracking in real time. Right now, why is the S&P still consolidating in here and trading in here? Because there's still some buy orders that need to get filled. So let's look at some other markets. So here is the 30-year. Let's take a look. There's the weekly, but we're not going to, what I want to point out on the weekly is this level right here. There's a nice, someone want to look at the 30-year, which I love looking at this market. So we barely came into the supply zone. So the fact that we barely touched it, I don't even know if you could say you touched it. If we came up there again, we would expect this to be a pretty strong level. However, you do have a couple demand zones below. Okay, so I wouldn't look for the 30-year to really crash anytime soon. You're really stuck in between those two areas. Okay. Andy, no, not always. You have to restart your analysis and make sure it scores out high with the odds enhancers. It all comes down to that. This all comes down to that odds enhancer score. Okay, so I'll put this in the chat. So make sure that your odds enhancer score comes out to a 9 or a 10. I wouldn't take anything lower than that. Let's see. I'm just looking for, oh, yeah, we can take a quick look at crude oil, not a problem. Here it comes. So I've got some old levels in here. Let's get rid of those. Crude oil, if we look at so here's crude oil. The level I want you to focus on, I was looking at this earlier, is this guy right here. That comes in at, call it 102.70, and you need your stop just above 103. Okay. So, yeah, so 102.70 with your stop's got to be just above 103. Make sure you're okay with the risk, and obviously the position sizing is everything there. It's turning higher right now because it reached a fresh demand zone. And again, if we look at this zone, we'll see that. There you go. So again, price just touched this level. So there's some money to be made in between these two zones. So we've got some buy orders down there, some sell orders above, and really nothing. You see how price moves so quickly down through this area? It's because if you look to the left, there's nothing in there to stop it. So it's just, so as much as we focus on supply and demand zones, it's just as important to focus on the empty space, the lack of a supply demand zone as well. Everybody understand that? Just as important. All right. Yeah, we can take a look at the dollar. Okay, so here's some levels we've had in for quite a while. As we inch closer back to that 81 area, you know, just make sure you're aware of that level. If you don't, I'm sure anybody that's been coming to my FX Street sessions should be, you know, should have that 81 on the chart. If you don't, you know, make sure you put it on there. That's a key level, because notice the first time back to 81, you just touched it and turned. That's a big clue that there's probably quite a bit of supply up there. Okay. Now let's go down to a smaller time frame. And I want to put, so we just came off this demand. So you see the turn right here. Okay. But again, notice we've still got plenty of demand below it. So if we came down to this area again, I would expect a rally. But let's put a horizontal line on the top and let's scroll left and let's see what we have above. Where's the dollar likely to go? We know what that stuff at 81. Is there anything before that? Not really. You'll probably get stuck. This will probably get hung up at about 75, 80, 75. Nice rally base drop supply in here. So we're just a little bit lower than that now, 80.57 for the US dollar. Our lines in there, levels. Again, fresh levels. All I'm locating for you today is fresh levels in key profit zones. Those are the trades you saw that we took this morning. And I also went over that trade from a few days ago. It's all the same thing. Fresh levels, hopefully nice big profit zones. So there's a nice rally-based drop supply coming in at 80.75, call it. So we've got where it's 80.58. That's the next likely turn on the turn lower on the upside. But again, you still have some demand just below, just in the 80.40 area. So keep that in mind when you're trading the equity index markets. Certainly any currencies against the dollar, any of the majors, right? And then all crude oil as well. Okay, nothing better to look at when you're trading commodity markets than the dollar. So with the correlations, make sure you're coming to these opposing levels at the same time, and that could be a nice little odds enhancer for you too. If you're any short-term traders of crude oil out there, anybody short-term trading crude? If you do, keep an eye on this. Watch price coming down into this area here. Just below. You might have a little, price, you should get a nice little bounce off this area. Oh, and you might be getting it now. Hopefully it goes a little bit lower. But I would say if you go another couple pennies, couple cents lower right into here. Okay. Oh, the 9 or 10. No, I would. For me, it's always 9 or 10 on the odds and answers. I wouldn't want to take anything less than that. Some people do. They'll take a confirmation entry with like a trade that works out to a score of 8 or something, but I wouldn't suggest doing that. You can do what you want, but I would stick to 9 or 10. Okay, so that's crude oil. I see it's turning here. I would still, if it goes just below 102, or just a little short-term income trade, if you trade the crude on a short-term basis. So I wouldn't do the 102. I would do just below the 102. Because you lose the 102 even by a penny, what are most people going to think? Are they going to get bullish or bearish? The average person is going to say, "Oh, we broke the whole number, so prices are going low." They're going to get bearish. Okay. And obviously, what you want is an invitation for kind of novice retail traders to sell into a price level where institutions are buying crude. Make sense? So just an idea. Again, it's not the best level ever, but you should get a nice little bounce out of it. All right, let's take a look. So I just want to revisit this S&P just because we've been following this trade all the way through. I'm going to make sure you understand the logic. So now, obviously, all the orders are filled here. The last buy order's filled. Now you see how price moves so quickly out of there? There's nothing to stop it. Now it's probably going to, I have my level down here. That's if you're going to buy it. But we're going to expect it to bounce, right up in here, kind of where it's bouncing now. Does that make sense? So again, the more you can look at these candles, and instead of just focusing on red and green, focus on the order flow that's going on behind the scenes that's responsible for the creation of this price activity, that's the key. And then you just want to get that focus razor sharp into fresh levels and significant profit zones. Does that make sense? Okay. I put my email in the chat there, sseiden@tradingacademy.com. So if you have any emails, there it is, Sunil. I actually put it in there right before you typed that. That's funny. So sseiden@tradingacademy.com if you have any questions. Now, if you're in this trade, according to strategy, we want to take profits right before we get to this level, which means like right here. Okay. So you want to take profits before you get to your opposing level, not at your opposing level. So this is a trade I took this morning. Again, I just want to explain the logic in detail to you to help you understand it. And yeah, hopefully this is helpful. And look, if you're having any challenges achieving your financial goals in the trading markets, just send me an email, and we'll figure it out. All right, sounds good. Well, have a great day, everybody, and hopefully this is a good start to the week. Let's see if what our euro's doing over here. Nothing really, just sitting there. Okay. All right. Have a great day, everybody. You've got my email address, sseiden@tradingacademy.com. If you have any questions, we'll see you next time.